Welcome to the Monetary Mixtape with Will Hoffman, founder of Hoffman Wealth Management. In this podcast, we help fellow Gen Xers simplify complex wealth issues that are important to Gen X. We do this by cutting out the mundane material and using a refreshing approach to finances in a way this skipped generation appreciates. Join us for this ride where we explore financial planning and wealth management as Will Hoffman draws from almost 20 years of experience and brings to you qualified guests to help be your latchkey to tricky monetary affairs.
Welcome to Monetary Mixtape with your host, Will Hoffman, where we talk about the ever-forgotten Generation X. I'm Wendy McConnell. Hey there, Will. How are you? Happy New Year and all of that stuff.
Happy New Year.
Still.
Yes, we're still celebrating the New Year, still writing the wrong dates on my checks, still trying to get through all that. But yeah, happy to be moving forward in 2023 and really looking forward to the rest of the year.
Yeah. So we have a guest today. Would you like to introduce him?
Yes, I wanted to bring somebody on, especially this early in the year, to talk about, we talked a lot about inflation last year and how it can be kind of a silent thief in the night when it comes to our money and having an impact that is out of our control. And to kind of compound on that, something else that we have to be cognizant of that goes beyond the market and inflation that can impact our wealth is taxes. And I feel like when I say taxes, we should have a little Darth Vader. But yeah, I have Josh Jones from CompFinO Tax and Accounting Service. Josh is an accountant in our region, and got to know and meet Josh and his wife Kelly through a common professional down in Florida, and really have appreciated the content that they have and their website and some insights. So welcome to the Monetary Mixtape, Josh Jones.
Thanks, Will. Thanks for having me. I'm excited to be here. Excited to answer any questions you have on the tax side. Always a fun topic to talk about. Nobody wants to talk about it, but everybody wants to know about it. So
maybe fun for you to talk about, right?
Yeah.
So just to kind of introduce your firm and what it is you guys do. How did you get into accounting? What's a little bit about your background that our listeners need to know?
Definitely. So I started. So we're CompFinO. Is the brainchild of our two small businesses that we had before. We owned Bean Counters Tax and Accounting Services and Prominent Payroll, and they're always the same staff, what have you. And we said we're going to bring these two together. So we just went through a name change recently. So CompFinO is the combination of Bean Counters and Prominent Payroll. And we got started. We started Bean Counters probably about 15 years ago. It was just me. And then about a year later, my wife came on board. My wife and I met in public accounting at KPMG. So we're lifetimers. And
nice.
We and that was it. From there, we started growing. We have an office in Pittsburgh. We have an office in Naples, Florida. Now we have 8 other employees. So pretty nice sized firm. And we do everything accounting. A lot of our focus is on the small business side, but we definitely help with individual taxes, trust, estates, what have you as well.
Nice. Where did your interest and passion for taxes and for accounting come from? What motivated you to get into the field?
I think I was just somebody who wanted to maximize my wealth. And, I think you can't maximize your wealth without thinking about the tax implications. So, I kind of got intrigued of how that all works and some of the creative planning you can do regarding, you guys do a lot of creative planning on the financial side. You got to take into consideration the tax side of it as well. And I think that's kind of what got me into it and kind of keeps me going and makes it exciting.
Yeah. And being on I don't want to say the opposite side, because we, our professions work hand in hand a lot. The taxes are some of the biggest questions that we have, and we understand. And by we, I mean, my profession and my peers, we all understand enough to be dangerous, but want an accountant's perspective or a CPA's perspective on a lot of things, because it can be confusing. There's a lot. The tax codes is pretty thick, and it's getting thicker every day. And we rely on I think we rely on one another pretty well. And I know our firm loves to work with our clients' accountants and with other accountants, because we always seem to learn something coming away from those conversations, and it's something that we can kind of carry forward and help our clients and help other clients and really, like you said, come up with those creative solutions that help folks maximize their planning. When it comes to a process for CompFinO, is there anything specific or special that you guys do when it comes to working with a client? What's the process that you guys put your clients through?
Well, this year we just rolled out a new, I'm going to call it customer-focused management website. Kind of keeps everybody organized, and within that, there's an interviewer. There is the ability to take a picture. It has an app. There's the ability to take a picture on your iPhone of your W-2, your tax documents, and upload it. Our clients are going to e-sign their tax return through this. So it's going to kind of a place where a client can go and really see where they're at with their tax return. And it just helps keep everybody organized, helps them communicate with us, and really just maximizes the use of technology. I think it's going to be pretty cool. We've been rolling it out now for a couple of months, but this is going to be its first real tax season. We've talked to other accountants all over the country that use it, and they're really happy with it. So what we find, especially in Western Pennsylvania throughout, is a lot of accountants are still using the technology that they used, forever ago. So we, using this, I think, helps us kind of, keep up to date with everything.
Yeah, we've LPL's kind of spoiled us with kind of the same thing. The clients' tax for their accounts and things with us are readily available at their fingertips, that they can, they're not waiting for the statement or waiting for the 1099s, for example, and they can get them right over to you guys without leaving their house, which is going to be kind of cool. And LPL's rolled that out for us, for our clients in our AccountView web system. So we're excited for that. And this will be the first tax season that I know that we engage that fully. So we're excited for a lot of those changes. Josh, we were talking kind of in our informal lead up to recording about a lot of the things that we share interest in. And it seems like sports is the one thing that we haven't dove into yet with the Monetary Mixtape is a big, topic of discussion. And I think, some of the most poignant sports moment in history kind of occurred during our generation. And Josh and I are both part of that exennial cohort where, we were born in the late 70s, early 80s. And really, I think went through the gilded age of sports in the 80s and 90s. When you think back to that, Josh, what's kind of a great sports moment of our childhood or even of the Generation X and Xennials that you think about when you talk about sports in our generation?
Well, I think about the kind of the 49ers dynasty. I grew up a 49ers fan, even though I lived in Western Pennsylvania. And, you can't forget the catch with, Joe Montana and Dwight Clark. So I think that's something that always sticks in my mind. And I think that really started that Joe Montana dynasty. And then, you bring Jerry Rice into the mix and just kind of what they did during the 80s. And then, even fast forward into Joe Montana leaving or being benched and Steve Young coming in. So kind of probably similar to what the Patriots did not too many years ago. The 49ers were that team in that period. Yeah.
And, the birthplace of football is not too far from our office, at least the birthplace of professional football. And huge football history. And Joe Montana is right from our backyard, right there in Ringgold, Pennsylvania. So, yeah, that's I can always see the catch, the camera angle from the end zone and Dwight Clark leaping up, and that's an important moment in sports. And you're right, started that whole dynasty. We always talk about our generation being a kind of a change agent, and the biggest thing I think about is really there's two parts to my favorite moment. I'm a huge golf fan. I love to play golf with our boys. when you think back to the 80s, you think of Jack Nicklaus winning the Masters in 1986 at the age of 46, and walking the putt in on 17. And then fast forward to 1997 and Tiger Woods, it being the youngest Masters winner and winning the Masters. I don't know if it was his first or second tournament, but really early on in his career, just winning it, and not just winning it. And I mean, he won in dominating fashion. And, as a Gen Xer, he was changing the way the game was played. He was changing the way courses were designed. They started, Tiger proofing courses with the technology that was, that he was using, and, changing the way golfers viewed, weightlifting and their physiques. And that's always the biggest moment, for me at least. And there's so many poignant moments. You think about Kirk Gibson rounding the bases, and his home run off of Dennis Eckersley in the A's. And then you think of the World Series that was interrupted by the earthquake, Mike Tyson emerging as, world champion.
Even in our backyard, I mean, how important is Andy Van Slyke getting tagged out at home plate, and it changed the trajectory of the Pirates.
Right.
They never come back.
Or you mean Sid Bream?
Oh, Sid Bream, yeah.
Sid Bream, yeah.
Sid Bream,
I think he just finished rounding third right now. He was just lumbering and yeah, that's one. Wendy, what do you have for us?
Well, since you brought up baseball and being from the other side of Pennsylvania, I have to bring up the 1980 Phillies, Tug McGraw and the hand on the heart, getting through that last pitch.
Is that was Mike Schmidt?
Oh yeah,
on that team yet? Yeah. He was a favorite of mine. He was a favorite class guy and one of my favorite baseball players, even though I was a Pirates fan. And I shouldn't say was. I am a Pirates fan. It just is.
Mike Schmidt calls some of the games now.
Yeah.
It's a lot more difficult to be a Pirates fan today.
So as we're heading into 2023, when it comes to tax changes, Josh, is there anything on any tax changes or any tax headlines that we need to be aware of, specifically Gen X, and not just what in fact impacts our returns, but a lot of Gen Xers are helping their parents or taking care of their parents. Any taxes or tax changes we need to be aware of?
So the big changes that occurred this year are more just the expansion of the tax bracket. So you're seeing a lot of inflation adjusted changes. You're seeing the standard deduction increase significantly. The amounts you can put into your 401k increase significantly. So those are the kind of things that we're seeing this year. There's small little things as far as during the COVID years, you were able to take an above the line charitable contribution that went away, but those are all very minor things. I think the thing that's going to surprise a lot of people this year is how much the standard deduction went up, how wide some of the tax brackets have widened due to inflation. So those are even, you're taking how much money you can put in your 401k, it went up $2,000. I mean, that's a significant, historically you would see that go up $500, maybe a year. So that's a pretty significant change, and probably a lot of that is inflation driven.
Hey, sorry for the interruption. I know you're listening to the Monetary Mixtape because you want to learn about financial planning and wealth management. If you have any questions at the end, please head over to www.hoffmanwealth.com or look in the show notes to schedule a call with us.
Yeah, that's something we're helping our folks plan for. And I think, especially in our accumulating years with the Gen X, it's going to help us a lot and help us, maximize what we pay in taxes. When it comes to the taxes and filing and staying organized, are there any big mistakes that you see specifically Generation X make with their taxes?
The thing I see a lot, and I think this goes a little bit into your world as well, Will, is everybody it says, oh, I'm putting money in my 401k, I'm putting money into my 401k. But you see a lot of people that aren't really maxing that out or potentially aren't taking advantage of the Roth option. Most employers now have a Roth option in their 401k. And it's a common misconception by a lot of people that I'm over the income limit to contribute to a Roth 401k. You can make $100 million and contribute to a Roth 401k. You're not going to be able to contribute to a Roth IRA, but you're able to have that ability. And I think that's pretty valuable, especially as people are coming up in their earning years while they have kids where they're still getting a child tax credit and what have you. I think there's a lot of value in using the Roth option, paying the tax on the money now to never have to pay the tax on it again in the future. And then maybe as you get older and your income increases, you no longer have the child tax credit. Then let's think about going back to the deferred amount. But I think, and you probably can speak to it better than I can, having some money in a Roth account is pretty valuable as you approach retirement.
Sure. And so, something we talk about with our clients and encourage is to consider the tax triangle of where income is going to come from once you're done working. And that Roth fills that non-taxable bucket and allows you to retain more of your money and count on more of your money and not have distributions impact things like Social Security and stuff. So it's the advent of the tax or the Roth 401k is something that should be examining and taking advantage of, and if it's not offered, asking their employers for that to be offered.
Yeah, and you're right. I think that if you have a client that works for a small business, that small business owner, I know it from experience, to add the Roth option to your 401k holding is pretty easy. They may not even know it exists. So yeah, getting out in front of your employer and say, hey, how come we don't offer it? It's a benefit that's basically free that could help a lot of people. So I think you're right about asking your HR department or whoever to maybe offer that benefit.
And one area that I want to bring up when it comes to maybe tax errors or errors or mistakes to avoid, it seems like in the last few years, the side hustle has grown, and folks, earning additional income, whether it's through, doing things through different technology sources or selling things online or, picking up side jobs and using their talents and resources that way. We encourage folks to make sure that they are considering that money when it comes to their taxes. Do you see any mistakes there or any changes there that we should remind folks about?
The big mistake there is people just forgetting about it. Oh, hey, I drove for Uber for a couple months and I made a couple $1,000s, and then I completely, I did that in February. I'm doing my taxes at the end of the year. And I get an IRS letter. It says, oh, you had a 1099 from Uber for, $5,000 or whatever it was. And then we have to go back, amend the return, bring all the expenses into it. And what I usually recommend to people that are going to pick up these side hustles, whether it be, driving for Uber, selling something on Etsy, there's a million different things you can do, is to really keep track of your expenses. Right. Because you're going to have the income, and a lot of times these side hustles really don't make any money. You're going to get a 1099 for $5,000, but you may have had $4,500 in expenses, which would make your tax liability only on $500 as opposed to $5,000. So keeping track of those, thinking about what expenses you have that are associated with that side hustle, because it's essentially a small business. You're running your own small business now, and the important aspects of that are managing your expenses and making sure you're tracking them. So at tax time, you have the expenses to offset that income.
Right. And one thing that's been pushed back, a lot of those folks get paid through, either PayPal or Venmo. They've pushed back that tax collection feature, correct?
Exactly. So the thought process was that anybody who received over $600 via PayPal, Venmo, Cash App, whatever, a million different these apps that, a lot of times are just used to split dinners or, pay somebody back for something or what have you, that was going to be reported. Now, it's not the end of the world if that gets reported. If you gave me $600 for something as a reimbursement, I would just have to show that on my tax return that I got $600, but I had $600 of expenses. Where people are going to get in trouble is that, what we talked about before, you forget that it happened, you don't know you have that tax form coming, and you file your taxes as is, and then the IRS has a note that you traded $2,500 on PayPal, and they're going to send you a letter and say, wait a minute, this $2,500 wasn't on your tax return. So it's something to be cognizant of. Most people, it shouldn't create taxable income, but it's something you're going to have to show on the tax return and show the offsetting expense when that goes into play. So it's going to make a lot of people that never had to file a Schedule C before file a Schedule C.
Yeah.
So, yeah.
So people who use it for just, buying the pies for the kids' fundraiser, they really don't have anything to worry about with that?
They don't have anything to worry about because their expense in that example you just gave would be the pies. So they bought, I bought $100 worth of pies. You sent me $100, on the tax return. I should have $100 of income and $100 of expense. But if I don't show that the income and expenses, and I just completely ignore it, and there's a 1099 out there with my name on it for $100, fast forward after taxes get filed, you're potentially going to get a letter from the IRS that says, hey, you had this $100 and we didn't see it on your return anywhere.
Well, you said it was for 600 and above.
Right. It was.
The other question is, who is creating the 1099s then? Venmo and PayPal?
Yes. So they would come from there, and this has always existed, but it used to be you had to do $20,000 worth of transactions. Now my understanding is it's anything over 600. So it's really less than, you buy $100 worth of pies 7 times. Now all of a sudden you're getting that 1099.
Right. Okay.
Yeah, it's something to make sure and keep track, keep your records, keep receipts. That's the way to make sure you're documenting that, right, Josh?
Yeah. I think it just making sure you've picked it up, and I'm sure this does come into play. Whether you're somebody, we're definitely going to have it, be asking our clients for it and finding out. But I think any tax preparer, even your tax preparation softwares, if you're somebody that says, hey, my return is easy, I'm going to do it on TurboTax, I think that they're probably going to have this built in as well just to make sure they capture it and what have you. And who knows, we may see some changes in that. I mean, it already got pushed back once. Hopefully, historically, you've been able to set up 2 separate accounts and say, well, this is my business and this is my personal. If they allow that, then you could still, pay for dinner between 2 friends and not have to worry about filing a tax return. So we'll see how it evolves.
Depends how good of a dinner it is, though, too, right?
Exactly.
When it comes to Gen X and taxes and their wealth, what things should Gen Xers be doing to make sure they're on the appropriate path to paying the right amount in taxes, not paying too much, but also fulfilling their obligations so they're not at risk of any audits or anything like that?
So it really depends. I mean, if you're just talking 2 W-2 folks, husband and wife making $150,000, $200,000, $250,000 a year each, not a lot that can be done from a tax saving perspective outside of using the plans that are through your employers, your 401ks, maybe your HSAs if you're eligible, those kind of things. But the one thing that people don't think about their taxes as, they always think about it as April 15th. So I get to April 15th. If I owe, oh my God, I did something wrong. If I get this huge refund, oh man, I did something right. Neither one of those things are very good. And what you have to really think about it is sometimes what causes that, either to owe or to have a huge refund is income discrepancy between spouses. So if one spouse makes $300,000 a year and the other spouse makes 100, that you're never, the person making 100, their withholding is never going to be able to keep up. So you're probably going to have to make some estimated tax payments or, go to your employer and say, I want to have additional funds withheld. That happens a lot. And, people kind of get upset. Oh man, I can't believe I owe money. I've had taxes withheld throughout the year. But in situations where there's an income discrepancy, you're going to get, you'll probably get to the end of the year and you're going to owe money. And that's, and that's the reason. I would
Right.
say 9 times out of 10, when somebody owes money, it's something along those lines. It's just one of the spouses has a part-time job, the other spouse has a full-time job, and the withholding just isn't enough on that part-time income.
Yeah. And one thing we always encourage our clients to do is tax planning throughout the year.
Yeah.
Because December 31st is a pretty hard and fast deadline from the IRS. And, if there's something that you think about on January 3rd, it says, shoot, I should have done this. You're kind of stuck.
Mm-hmm.
So consider your tax situation throughout the year whenever you want to make, if you're making distributions or contributions, or, an inheritance or something happens, or, opportunities. We see it all the time with our clients. If they're, doing a transaction from, company stock programs that they can participate in.
Mm-hmm.
Sometimes those windows are open for a very short period of time, and understanding what your tax situation is when it comes time to make those decisions is very important, because, after December 31st, there's not much that can be done for last year.
Yeah, you're right. Yeah, I 100% agree. And yeah, you brought up employer stock transactions and what have you. Those can shoot you in the foot sometimes from an AMT perspective. Those are very, especially if you're in a situation, a startup or what have you, where you're buying stock for $2, it's currently trading at 80. You're going to have an AMT situation. That's something you want to get out in front of, and a lot of people don't realize that, and it can have a big surprise at tax time.
Yeah, and making accountants our friends is important. Making that profession, your industry, our friends, as we're accumulating and participating in things is so important. So if our listeners want to get in touch with you, how do they do it? How do they follow some of the things that you guys put out or publish? What's the best way for someone to reach out to CompFinO?
Yeah, definitely. You can look at our website, www.compfino.com. That's COMPFINO.com. My email is josh@compfino.com. Our telephone number and have you is on the website. And we're just rolling out a new website here. It should be live whenever this goes live. And we on the website, they'll have different ways to contact us, where we're located, a lot of details on how our firm operates and what we do. So yeah, I think that's the best way to get a hold of us.
Awesome. And I like the logo. Going through the change, we just talked about that leading up, and you kind of gave me the explanation to the name CompFinO. You want to give our listeners a little bit of a description there? That's kind of a cool. I'm like I said, when we were talking, we went through a logo change recently, so that stuff kind of fascinates me a little bit.
Yeah, we wanted to kind of, a lot of what we do revolves around the small business, and with our client relationships, we kind of become their CFO. So CompFinO is complete financial organization. We keep them organized, whether they're a personal tax client, small business. We just keep them headed in the right direction and organized. That's kind of our goal.
Awesome. Well, that kind of brings it to a close with us here on the Monetary Mixtape. Wendy, do you have any other insights that you wanted to add?
Insights. Wow. Way to put me on the spot here. What I am wondering is, how can people get in touch with you, Will?
With us, as always, it's hoffmanwealth.com. Very active on LinkedIn, and you can follow us on social media through our Facebook page or LinkedIn. We put all that information down in the show notes. Go back and check out some previous episodes. I think I mentioned in our first episode of the year. I'm really excited about some of the stuff we have coming up. We're putting together a really good series on not just college saving for Gen Xers and their kids, but education planning. And I have learned a lot through this process, and some of the guests we're going to have on. But it goes beyond just, and Josh, probably some of the things you encourage your clients to use. It goes beyond just what type of an account you can save in or how to invest. There's a lot of things that we can be doing for our kids when it comes to the 4 to 6 years leading up to education, and how to prepare them, how to prepare to save money and maximize the things that are available. So the next few episodes are going to be valuable. They're going to be important if you're in that phase of college prep. So I encourage you to stay tuned, to listen, to share those episodes with your peers whenever you hear them. They're going to be really, really, really insightful when it comes to that that phase of Gen Xers. And make sure that you're keeping track, you're doing your annual tax planning and doing it throughout the year, not just between February 1st and April 15th, so that there's no surprises. And Josh and his firm are a great resource for you.
Yeah, thank you, Josh, for joining us today, and thank you, Will. Thank you for joining us on Monetary Mixtape. Please like, follow, and share with your friends. Until next time, I'm Wendy McConnell.
Don't bounce just yet. The street lights haven't come on. Thank you for listening to the Monetary Mixtape podcast. If you thought this episode was dope, then click the follow button to be notified when we drop a new episode. Visit our website at hoffmanwealth.com or give us a call at 724-522-5411. And don't forget to click the follow button to be notified when new episodes become available. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of Hoffman Wealth Management. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investing advice. Always seek the advice of your financial advisor or other qualified financial service providers with any questions you may have regarding your investment planning.
Securities offered through LPL Financial, member FINRA SIPC. Investment advice offered through Private Advisor Group, a registered investment advisor. Private Advisor Group and Hoffman Wealth Management are separate entities from LPL Financial. All performance referenced is historical and is no guarantee of future results. All indices are unmanaged and may not be invested into directly.